Okay, market breakdown. We commence in 29th of June 2020. With the end of the month, so the end of June, comes also the end of the second quarter of this year, meaning it's important to look at, first of all, the broader picture, the overall time frame, in this case, the 3-monthly or quarterly time frame, to see how prices has moved, within what ranges, before taking a look at the lower time frames to take a look at what could potentially could be happening over the next 3 months, but also the second semester of 2020. So by beginning my analysis on the DXY, so the dollar index on the 3-monthly or quarterly time frame, we can see that actually, as opposed to what many people may assume, given the multitude of events, to say the least, that took place since the beginning of the year, actually the dollar at least has been trading since a very clear and respected range, which, outside of these fake outs either at the top or the bottom, were almost always respected. So I'm talking about referring to the 100 to 95-ish range, which has actually been respected since April 5th, 2015. So about 5 years of price action, which we saw being contained within this region. So the quarter and the month ends on a very indecisive sort of anatomy from a candlestick standpoint. So as you can see, we pushed all the way high to the 100.1, all the way low to the 95.8, roughly speaking, and we actually are about to end in the middle. So this gives a very confused, very mixed signals picture, because it's not like something like that where there was an engulfing which engulfed price action of 1, 2, 3, 4, 5 and almost 6 candles prior, when it broke that sort of resistance level, and which then became support to then continue higher. So now the image isn't as clear as we may assume. The dollar has been very volatile, as we're about to see lower on the lower time frames. But I just wanted to give that first broader picture that actually we're within this broad range, which we still haven't violated or broken. Now, the monthly time frame, just looking at very simple naked chart, I've hidden all the technicals for now, shows that after spiking and revisiting these regions at the top of the range, which I've just talked about, which would just be this here, contained within the crosshair I'm showing on the screen. Actually, we've got some indecisiveness, and then a bearish momentum. But actually, towards, we could assume, the end of the month, we've got some bullish pressure, because price went all the way back there to retest these lows, very important levels of support, resistance, which then almost triggered a bullish leg to conclude the month. Meaning we could be seeing some bullish pressure to then spring price all the way back higher towards the 99, 100, and 102, towards the very top of the range. Now, the weekly candle, or the weekly time frame rather, could confirm this picture, because we've got this low that was almost revisited, and that very bullish pressure is very clear, is very prominent by looking at this. We could call it tweezed or spinning bottom candle, where price went all the way down, got stopped down there, where there was a morning star formation almost, to then continue higher. So a potential play to the upside is likely. However, now by bringing back the technicals, in order for me to almost accept and act upon a continuation higher, maybe towards the 98.2, 98.8, and so forth, I'd like to see a very clear formation on the 4-hour, mainly on the 4-hour time frame, where either price shows me that it's willing to break up above this level here, this region, which for a few times got rejected. So once here, and then for the second time there. But we're also seeing some break and retest, meaning this area around the 97.7 is crucial for the dollar index. Now, in order for me to accept a continuation higher, I'd like to form a high, come down, form a high low, which would be higher than this low, to then push all the way back, potentially down up to the 98.3 that I have shown. However, the opposite scenario could also happen, because just as much as this level held up or prevented price action from breaking and retesting and continuing, there's no one to say that this could not happen once again, forming a triple top, which would then almost build up enough liquidity up here, catching all the orders that, or the interest from the sellers that had an interest in keeping price below the 97.7 to continue lower, and perhaps respecting this 1, 2, 3 touch of this ascending channel before perhaps, but there's no one that knows this just yet, to continue higher and finally break that that support or resistance level, which will then become support. So in order for me to see that, I'd like for price to break clearly the 97.7 level. Within the very short term, so maybe in the next couple of days until maybe Tuesday or Wednesday, price could come all the way back down, form a triple bottom, build up enough liquidity, come all the way back, all the way up, and do what I expected. If this was to be the case, and if price was to break up above that level, we could then visit levels such as the 98.3, 98.8, meaning dollar strength. So this is the DXY, so dollar currency index strength, meaning the dollar is going to also perform in a positive fashion put against all the major currencies. So the ones I'm looking at the moment are Euro USD. And if dollar strengthens, that means this cross, this pair, is going to weaken, as long as the euro will not be as strong as the dollar, obviously. Because there's two ways in which in which a currency pair could move. Either by the strength of the first one, if it goes higher, or the weakness of the second one. Okay, there's always an inverse and opposite correlation between the two. So similar way of looking at a chart by beginning on the quarterly time frame. As we can see, price has tried to pierce all the way through by reaching, almost touching the 1.15, couldn't manage to, but the opposite is also true. So it went all the way back down to then be pushed all the way higher. It's now resting at a key zone, the 1.2, as we can see here, resistance, support, resistance, meaning that's a key level that it will need to be broken before confirming the move either higher or lower if we break and violate this region down here at the 1.06 to 1.04, given the presence of these spike. Okay, so it's important now to look at the monthly time frame, as we're about to come towards the end of it. As we can see, price has tried to pierce, like I've said, but we can see some selling pressure, so bearish interest to keep price lower than the 1.14, roughly speaking. So the weekly time frame could actually confirm this. So we could see a reversal, and this could be signified by the spike, and so forth, meaning the momentum has been strong enough up until this point. Yes, the spikes have gone to revisit this higher region of the 1.1415, but now the sellers will come in, outweigh the buyers, and therefore this could actually line up with the dollar strength. But this remains to be seen, because in order for me to be convinced that indeed this is what is going to happen, I'd like to bring back on the technicals and say that the 4-hourly time frame, let's just get rid of that, shows an important level at 1.2 that is showing some rejection, as we saw the presence of many spikes. So prices tried to visit it, got rejected, visit it, got rejected, break, no break, meaning this is a very important level. So it's important to then realize that in order for us to try and short the market towards the 1.14, we first need to see a solid break of that level, a potential retest going to trigger the zone there as a potential sell. So just put the stop there, about 40 pips, first target, second target, third target. So Euro USD is a very technical pair. It likes to move between 50 and 100 pips region. In fact, I've got a whole new analysis of Euro USD where all you can see is the way in which price reacts off of the key 1.1 zones and 1.150 and 1.250 and so forth. So whole numbers and half numbers, if that makes sense. So I just wanted to show that, or maybe on the file will be clearer, that whenever price, especially this on this pair, Euro USD, approaches a key zone, it almost seems to be reactive off of it. So we've got some rejection there. rebounds, rejection, rebounds, rejection, and so forth. So it's a very technical pair, which could mean that yes, this level will be confirmed because it's a psychological nice round number of 1.12000. So that's my analysis on Euro USD. Let's take a look at the next pair under my radar, which would be pound yen. So again, let's always begin with the quarterly time frame. And yes, we're at very significant and critical lows. As you can see, this is not the first time where price rests at the 130, 131-ish level. So it happened here, there, and a few more times in the past and in history, even in 2008. I mean, this is a crucial zone, and only maybe a couple of times it managed to break through. But then after it did, look at the the buyers' momentum that had an interest in pushing price higher, meaning this region should not really be violated because this pair up until this point is not worth any less than 130. So that's the way I like to look at the pure price action with no technicals on it. Now the monthly time frame could be indicating maybe a potential for us to visit because we've had that bullish momentum and then buying was not strong enough to resist that selling pressure. So we've got the spinning top, which could actually indicate a further movement down towards another technicals will actually come back towards this level, find some support to then push higher. But this won't happen in just a few days because remember we're on the monthly time frame. So we'll take a look at the weekly to see what could actually happen in the medium to short term. So selling pressure, and again, so we could actually come down a little bit more towards 130. Let's bring back the technicals and take a look at the key levels that, in my opinion, will be the most important ones. For this pair, I see some support here at the 131.8, but I'm more interested in seeing how price will behave on the 130 spot 50. And if we manage to break this level, I'm also guessing that there's no way we could not anticipate something like that. So this could happen. It's not off the table. It's not off the chart, to be honest. And the 4 hours then showing a picture whereby we could actually see, yes, some selling pressure, but we're at key lows. So look at if I then just manage to, yes. So that's the base. Let's put it like that. After which price, so drop base, and then move all the way back up. Meaning there's a lot of buyers' interest here because after this region was then touched again, look at the pressure from the buyer side. Excuse me. So it's important to really dissect this pair by taking a look at maybe the 1 hour as well, bringing back some technicals. So the 50 MA is almost showing a bearish analysis. So we could see price push all the way down, continuing this sort of downward trend fashion to revisit this key area at 131.8. If that holds up, then we can see price react off of this level where price then initiated a very strong and important and impulsive leg to the upside. Or otherwise, let's be patient, no bias needed. Let's always wait for the market to show its hand. And if we were to go and revisit these levels, first of all, let's wait for the clear break of this level, 131.8, a retest. Let's take a, however, this is not enough for us to actually sell the market, because in order for us to be convinced that actually there is a potential to go short, we first need to look at the velocity or the momentum of price. So one thing is going down like that, very impulsively, and another thing completely is going down like that. Okay, so in that case, the sellers was very, very strong. There's a lot of momentum. And in fact, look at what happened. Yes, a little bit of a breather, but then it continued lower. But if we were in a situation where price would behave in this manner that we've seen there, then okay, breakdown, we are very corrective, so very similar price action to this. So in this issue, to then continue lower, pretty much like this showed to us. So we could see a continuation lower, but in order for us to do that, let's first break this, retest it. Very simple break and retest trading, and then go lower. Now, finally, the third pair I've got my eyes on is GBP USD, another major. So the 3 monthly time frame, very similar. So we're at key critic, very important lows. Yes, we've had a few spikes, meaning the seller's pressure was that strong that we went all the way down to almost the 1.1, but we never quite reached the parity because that would be very crazy from the market standpoint. The day where the British pound, so the sterling and the USD will be equal to each other, will be, a very not symbolic, but very important day, and I don't think will happen anytime soon, if ever. But as we can see just by looking at the monthly time frame since the October, September time frame of 2016, so about 4 or 5 years, we still haven't violated that level, if not for just a few times given by the virus situation, which caused a lot of volatility, much higher than normal. You can confirm that by looking at the VIX chart. But by looking at the technicals that I've drawn here, we've got some key important zones. So like we've said, the bias is to continue lower, perhaps, given that seller's pressure or bearish pressure. But now there is also the likelihood that will react off of that level, 1.21. So as you can see, whatever's marked as red to me as higher importance as whatever is marked as blue, meaning this is in my eyes a daily zone, the one signed in red, whereas the one signed in blue is a 4-hourly. So as you can see here, wherever on the daily chart price reached that level, it then impulsively moved higher, and then, for example, there, so impulsively moved down. So it's a very key reactive level. Let's look at that. But they always happen to coincide with a very clear rounded number psychological level, 1.15, 1.21, 1.25, and so forth. Meaning these are technical pairs, that's why I prefer them compared to the exotics such as EuroCAD or, I don't know, CHF, Japan Yang. They are more complex to dissect, and which is why for now I like to stick with more technical pairs. So we've finally broken that very, very important level, at least on the 4-hour time frame, because after that strong momentum, only that level could hold up, the 1.235, to then react off of it and continue in the opposite direction. Okay, so we're finally broken, and what I'm expecting now, as you can see from this tool here, I'd like to go short, but in order for me to do that, I'd like price to retest it, perhaps forming a mini, so because we're on the lower time frame, double top to then continue lower, and I'm going to bring it towards the 1.225 level at least. Obviously, I'm going to manage the position accordingly. I will never make any rush decisions if I'm not too certain of it. If I see that there's a potential reversal happening, but the bias is at least towards 1.225. Because that's where, as you can see, even from the 4-hourly, that's where the bigger move stems from, okay? There's where the buyers had enough, sorry, let me show you better. That's where the buyers had enough liquidity build up to break above the 1.235, which all the market participants up here did not have enough liquidity to do, okay? So let's see how the markets is going to play out, and I'll catch you guys later. Thank you.